I'm Rob Sarney, and you're listening to What the Heck Fintech, where you'll experience and learn that Fintech is Fin Life. Let's get started. Welcome back to Part 2 with Mike Nugent. If you didn't hear Part 1, please go back and listen to it so you can hear Mike's great background and how he grew up into VC. He also goes into the compare and contrast of the 90s until now from a tech, data, and founder standpoint. Now, I'm gonna pivot a little bit here. I'm gonna talk about the tech now a little bit. I'd love to hear your take, because you talk to so many startups. You know, you probably can't leave a startup without the word AI coming up, right?
Yeah.
What technologies are you thinking about? Are you they like to hear more about or less about when they pitch, or even what you want to invest in? AI is everywhere. I'd love to hear your take on that and where we are today with AI and how you look at AI. I'd love to hear that perspective. Then you have blockchain, and then you match blockchain with AI, and then it gets even more muddier, right? And so what technologies are you really focused on, and what are your opinions of them right now and in the future?
Yeah. So I guess I'll speak this more like top down as to what the design and interests are, and then what the impact is of AI within those areas.
Perfect.
For me, for lack of a better reason, both John and I probably lean towards enterprise. And I think enterprise is just a much better, more predictable, model that you can get after. Are you actually doing things that are, gaining efficiencies for the organization? Is there a cost benefit analysis? Can you see the shortcomings within the current stack, or are they losing ground to competition? It's all those things that are sort of observable. Versus on the consumer side, it's a lot of page landings, and are you redirecting traffic away from others? And we all know that consumers can be fickle. What's hot one quarter might be cold the next quarter. Now, granted, there's some super successful consumer fintechs out there. I'm not going to take away from that. It's just not necessarily like as easily forecasted and assessed as we feel it is, and really looking more towards the enterprise side. But within that, even if you go down to the basic core technologies across the subsectors of financial services, whether it's insurance, wealth management, capital markets, lending, whatever, they're all running on some really old core systems in general. Very few have gone to cloud-based cores. Very few have gone to modern core technology that gives them the ability to spin up new instances or shut things down or make changes that go enterprise-wide. So that core, really, I mean, it's right in the words. It's the core, right? But so many firms have been afraid to try to step off of their 30, 40, 50-year-old core technology that was proprietary and in-house, because they don't have anyone that can sort of support it or bridge to the next. And they're pulling people back that, are patching some pretty old rickety sticks. So I do think that cloud cores that are going to be really specialists within sectors or subsectors, are going to be very important. Because right now you don't necessarily have that. And obviously there's great core providers. There's Fiserv, FIS, et cetera. But where are those ones? Where are those big firms that they built too much proprietary and have been beholden to it for too many decades? Because those are the ones that you can see that there could be major outages and, disruption, but also a lack of innovation. And if you're not innovating, you're falling behind. So that's an area that I think is just sort of, and this is a very big area, but I think is incredibly important. I do think in this, deregulation environment, and with the CFPB essentially getting shut down, reg tech is going to be incredibly important, because there's going to have to be, the industry as a whole isn't self-regulatory the way that you'd kind of want it to be according to the definition. There's still a lot of bad actors. I mean, we've seen more than enough banks and more than enough lenders. Folks have gotten in trouble for taking advantage of the consumer. If the CFPB goes away and those actions aren't being pursued anymore, it's, open game to go ahead and take advantage of the consumer. That's really scary. So, and then the other side of that, though, is if we start thinking about AI and its impact, it's two sides of the same coin. It's a bit of a heaven or hell bet, right? There's lots of things that can be gained from AI, but there's also going to be bad actors in organizations, as consumers, as third parties that can now use that AI for their own benefit. So, this has to really be thought through well and built to the proper standard to not allow AI to imbalance for companies to take advantage of consumers, for bad actors to take advantage of companies or consumers themselves. So it's going to have a fantastic cycle, and it's going to be faster and faster and faster than you could ever imagine. But this deregulation does cause us concern, particularly with the advent and the quickening pace of AI. The thing that I would go back to, though, that I feel like everyone sort of has jumped over, it's just the data quality, right? So if you have general AI, capabilities, they're being taught on general language, general nomenclature, sort of broad information, right? They're not specialists tools. They need to be built, they need to be defined, they need to be trained to become specialists. But the biggest problem still is we've got these massive data disparities within these large organizations. They can't even go back and see what old policies say, or there were so many different riders on policies, they can't normalize them, or the trading history is gone, or they just don't have the weather data from whatever it may be. We still have a problem with data quality and integrity and completeness. So getting that data into the proper, clean, manipulable environment is still a huge way to go for so many organizations. And then getting it to be able to be useful, from data to information is what I think we're still looking at in many organizations. And now you can use that information in training the models. There's one company I sat on the board on previously, and they said it the best. So a company by the name of Roots AI was originally branded as Roots Automation. And they said, ChatGPT speaks English, we speak insurance. And for me, that was just like, oh, that is so brilliant. Like, I want to hear of the AI tools that speak on, claims adjusters or, trading in, non-US equity. Like, what are they specifically trained and intelligent on? And how are they experts, not just jacks of all trades?
Yeah. Chaz and John from Roots,
Yeah.
AKA previously known as Roots Automation. Yeah, they're great. And I want to get them on the podcast too, because that'd be a great insurance, viewpoint that they have. Because I got to do some I got to do some student projects with them too, and they were in my class.
That's great.
That kind of stuff too.
Well,
so
I'll give them a bump.
Guys
I'll make sure they show up for the podcast too.
Yeah, that's right. I'm going to guilt them into it. You drop them a call and say I'm coming. They can hear my footsteps coming. Yeah,
absolutely.
So they don't ignore my email.
And if you think of something like that, so take their use case specifically, where they're really finding so much interest is on claims leakage. That perfect jargon. Most people don't know what claims leakage is. Claims leakage is the money's paid by insurance carriers they shouldn't have paid out. It's just like poor processing, maybe a little bit of falsified documentation, human error, whatever that is. But industry average is about 6% of all claims are claims leakage. Claims leakage is about 6% of all monies paid out. Think about the hundreds of billions of dollars paid out each year by these massive carriers. And 6% of it is just, you shouldn't have paid that out. Had you been buttoned up, had you known what you were doing, had you kept that fraud off the books, you wouldn't be paying this out. Pretty easy to justify meaningful enterprise contracts to address that and have solutions that can run 24/7, are buttoned up by the books, continually learning. It just, for me, it's like, wow, this is just such a perfect use case for AI.
Yeah, and with insurance too, InsurTech, there's so much growth that can happen there too because of because life runs on insurance, right? So you don't lose your wealth, and that's for something that happens. But then also the whole financial industry is based on some level of insurance, right? On everything. It's just another type of investment, risk versus reward, right? Yep. So it's a great example of, and the opportunities with fintech, especially with I always think for like auto insurance with all the cars and the cameras and the autonomous driving, and I authenticate to my car, and then it could, send the claim right to my insurance and know, even with all the cameras, who was really at fault, and where was the impact and how fast I was going, because they have the GPS, so the car knows everything I'm doing and knows if I dozed off or whatever, So there's just so much, like, we're not there yet culturally, but we'll get there eventually. And I think the whole insurance side is like huge and not untapped, but huge opportunities. I don't hear a lot of people talking about. I hear about it, but I don't hear it a lot. Maybe you hear it a lot.
No, but I think that's actually a great observation, because I think that speaks more to the broader fintech trend, right? And insurtech is clearly one of the major components of fintech. So, reg tech, wealth tech, bank tech, lending, capital market, like all those fall under. And maybe I'm like an old stodgy person and I look at these as all the subcategories. But when you look at fintech as a whole, it's incredibly underfunded. And the way I look at it is just really simple comparisons. If you look at US GDP and break it down by sector, consumer is by far the biggest, but a pretty close second is financial services. Yet consumer VC is multiple the amount of capital that's gone into financial services. So you've got the second largest slice of GDP is essentially clearly underinvested, and it's probably showing, and that's where we can really see, like, how do we get to parity with the advancements in consumer tech in financial services? And it can only benefit, it can only be beneficial to do so.
Yeah. And it goes because the mantra of this podcast, fintech is fin life. Everything, every company is a fintech company, either a little or a lot, but they're using fintech. And if they're not, they should be, so it's going to get more and more. And that's not just financial. That's, I think, even for a landscaping company, there's always some transaction going on you want to make frictionless, right?
Yeah, absolutely.
So now, Mike, our audience, unbelievable stories you just told them. They're going to want to meet you. They're going to want to talk to you. Are there any events that you're planning on going to coming up in the future that you're going to be at, so people can shake your hand and talk a little deeper after they hear this episode?
Absolutely. So maybe I'll just give a little bit of an aside, talking about my partner, John Zanoff, who I didn't get a chance.
Oh, yeah. Awesome. Oh, yeah, definitely. Absolutely.
So John and I partnered up. We've known each other probably about 12 years. The great thing is, tried to recruit John over to my former firm, and just wasn't the right timing. But John and I now have an opportunity to work together. So I'm so psyched about that. But
awesome.
More importantly, John, engineer by training, which I am not. I'm the data evangelist. He's the actual engineer. But had worked in the capital markets, worked at BlackRock and Goldman, building product. And while he was there, he founded Empire Startups, which is now the largest fintech community in the world. And out of Empire Startups, he really launched the effort that is New York Fintech Week. So he's been running that event for years. And along the way, Techstars had recruited him in to come run the Techstars New York Fintech cohort. So he ran that for about 4 years. And, I had actually taken my company through Techstars, which is how we had sort of that common DNA, and had been, involved with a number of his cohorts and a number of his companies down there. So, it's just fantastic to have somebody to, work with like that. But Empire Startups and BPS, we're running showcases now on best in class, best in show by different, sectors. So the first one we have coming up in October is a wealth tech best in show, and we're looking for nominations or, self-application for companies in wealth tech before their Series A. And we've got some wonderful partners, some very large names that are going to be working with us on this. Names you'll know, and I believe they're out there, but I don't want to overstep. But names you would definitely recognize that are working with us that are also interested in wealth tech, startups. So take a look for Empire Startups. And, if you are a wealth tech, or if you have one that you'd recommend that should be presenting that haven't raised their Series A yet, please come down and or let us know, and we'll take a look. The other thing I'd say everyone really should take a look at is Boston Fintech Week. If you're local, by all means, you should be there if you're in fintech. If you are not, but you have the opportunity, you should be there. It's an amazing gathering of early stage companies, the largest existing corporates, and they're all looking at this from really what's the innovation perspective. And so you should be there. And then obviously there's New York FinTech Week that occurs in April. The other one that, we all know of are the two that are back to back, InsurTech Connect and Money 2020. Bigger conferences both out in Vegas, but if you want to spend 2-3 weeks in Vegas, be my guest. That's not my thing. But make sure you attend those events as well. And if you want to get in touch with us, very easy, Mike at bps.ventures and John at bps.ventures. And the thing I should say, BPS, because we're in fintech, everyone thinks it's basis points. It's not. It's actually build, prove, scale. And it's just really the formulaic way we look at these early stage companies. So build or pre-revenue, prove or initial revenue, scale is repeatable revenue. And really with each one of those stages, there's typically a core capability that they need to work on. And at build, it's customer development. At prove, it's go to market. And at scale, it's sales optimization.
Wow. And you and John together like that's wow. You guys are crushing it. I mean, and it seems like you both like help each other in so many ways to really cover like the full gamut. Yeah. You mentioned John and before. I got to meet him. I don't know if he wants to meet a Boston guy. I got the Citgo sign, behind me. I don't know if he wants to see that.
He'd be good with it. Yeah, he's from Maryland originally, so he's not a diehard New Yorker. But
okay, that's good.
They're long
I'm diehard Boston, and Boston and New York fans. But but we're all fintech fans, so we all have fintech fans.
Exactly.
Right? Exactly. We're all on the same team, right?
Yeah.
Wow. Yeah. So you put in a good word for me.
I will. And Rob, I did have a question for you. So with all the stuff that you had been doing at WPI and where you're teaching now, where are you seeing the biggest trends building up? What are the students most interested in, and what are sort of the external companies that are taking a shine on the fintech programs?
So here's great question, by the way. I'm talking with a lot of universities, right, across Massachusetts and New England, and they're all at different maturity levels. They really are. Some are more focused on InsurTech. Some are focused on this regular fintech. Some are just like have a course, and it's kind of like a thing on the side. Some are going full bore. They're all at different levels, and there's so much opportunity from an education standpoint. And I think it's absolutely needed. So universities get connected with, the Mike Nugents of the world, and they hear them speak, and they learn from them, and then they learn so much more. And so there's a lot of work that needs to happen that a lot of students and professors don't really know what fintech is. A lot of people still think, it's the evil empire and it's to make the wealthy wealthier, which that does happen. Don't get me wrong, but it's also about the social good, the democratization of these tools. So everyone can have, whether they have, $1,000 or $1 billion, right? You want to raise that percentage. So there's a learning curve that we have. And then and the students I've seen in each school has a different strengths. Like some schools, like at WPI, right? And obviously in MIT, heavy technical, right? So they lean on that in a big way, which is great, right? You have some that are more on the finance side, and that's great also. But you need that mixed understanding of both. And you need the super smart PhD professors that are writing great papers and collaborating with industry. You need those, but you need a few folks like you and I that have been in there and bumped our head and been in industry and delivered and really seen things and what works and doesn't work. So it's the trend is wide open, to tell you the truth. And it's each university has their own little culture, and almost like a business, right? All the businesses have different cultures. And I'm seeing, obviously, AI, you can't, leave a room without saying AI, right? So everyone's focused up, but not everyone understands what agentic AI is. When you were talking about experts, I'm thinking, and I didn't know about agentic AI until January of this year. And I started really focusing on it. And then I kept hearing it. It's all about experts. So there's a whole education side. And here's my other take too, on a trend. I think finance terms, and you talked about terms with your startups pitching, but even in general, startup terms, and that's finance terms people get tripped up on. There's so many. Like, what does that mean? What's a derivative? Simple. You hear all this stuff in the news, but they never explain it. What's GDP?
Right.
How do tariffs mean to us? Who's really all that stuff? So there's a whole education side that has to happen. On the finance side, you get the tech side, all these terms and new terms are coming up all the time. You smash those together and everythere's frustrated unless they
It's
live in the
exponentially
spaces
more difficult. Yep.
And the spaces you and I live in, right? So, I think it's a whole education piece that needs to happen, and I think that's the ed tech side of fintech to make it all happen.
I couldn't agree more, and it was really cool that you're saying that because one, so my son's a freshman at Syracuse this year, but in high school they offered an elective called consumer finance, and it's very but it was awesome to see the things they were actually teaching these high school students to give them that basis, that strong foundation of just understanding basic finance, APY versus APR, a debit card versus a credit card, HELOC versus home improvement loan, like all these things that, and we're not even getting into tariff impact, right? And economics, but like, what are these basic things that you need to get your head around? And I was talking to another gentleman up here who's building a whole platform for independent music artists, to be able to do all their bookings, but create their own businesses. And that he wanted to include a whole education component about, running a business or running a music business. And so, well, you actually have to back that up a little bit because you need to actually make sure that they're in the financial system, because if you're doing, cash money for gigs, you have no record. And this thin credit and no credit, not bad credit. Bad credit's one thing. It's people that have been in the system and have, fallen below what they should have been doing to maintain the credit they'd utilized. But the thin credit and no credit are the folks that just aren't getting the opportunity, even applying for apartments, cars, whatever it may be. They're not getting the same opportunity that other folks are. And that all comes down to understanding, like, I shouldn't be doing everything for cash. One, government would totally agree with that. They want to get paid their taxes. But two, you need a record of employment. You need a record of earnings. That's going to help you to be able to get that apartment or get that auto loan or get that student, whatever it may be. So now it really comes back to, like, what is that basic consumer finance education that everyone should have? And where does that come from? Is it a ed tech component within Fintech? Or should it be pushed even to more of a priority as a standard, course within high schools?
Right. Yeah. I saw that when teaching at a tech school. There was so many super smart math students, and are also math driven, right? In all the deep engineering fields, but students, and I think, and parents and adults, their brain turns off when it's their own personal finances. It's like that simple math that they're so good at. They could do it in their head, right? They're that great at math, but also they're asking questions like, you didn't do the math. Like, I always say, do the math, and simply even directional math. And they're not utilizing that great math skill they have to bring them to understand finance that much easier. And I always thought, get to this high school we got to go after, but I say go after the middle school and before, and having those fundamentals. A lot of younger people get that depending on the household they grew up, right?
Yeah.
You get it from, and not all of them get it, right? Yep. And but some of them do. They have a CFO parent or something. I noticed that. Then they get it a little quicker because they got brought up that way, but some have never been exposed to it. So they're getting the first exposure when they step into a college class.
Right.
And that's great that they're getting it, but it's a little late, right? Because you should have had that financial understanding before you even picked the college you went to, because college is another investment for you with earning power. You're a company. That's how I always talk about it with students. You're a company. Millions of dollars are going to flow through you and your career. What are you going to do with that? Wow.
Right. It's funny. I definitely didn't grow up in a strong financial household. And, my dad was a New York City fireman. Actually, it's his helmet back there. Nice. But, one of the things that he did reinforce and said to me all the time, that was his educational nugget of knowledge, or financial nugget of knowledge, was, you can't file for bankruptcy if you don't have debt. And, growing up, bankruptcy was such a dirty word, and Now I'm just surprised about people looking at it as it was the way that you do it, So, but for me, because of like the very earliest learnings, I'm so debt adverse, and it's because you can't file for bankruptcy if you don't have debt. It's like, oh, don't want that.
Right, right. And that is what makes the world go around. I grew up the same way. My father was a state police officer.
Yep.
My mother was a school teacher and a school psychologist for the behavioral school systems. She did all the finances in the house, and I learned so much just how she, by osmosis, by watching how she talked about money. And I'm very frugal. My wife's very frugal. That's how we both grew up, and that's how we still are. Yep. But still, debt. You need debt. Debt makes the world go around as long as you manage it and understand it and know what it's all about and do the math, right? It goes back to do the math, and it's not that so scary. It is if you don't understand the math and you end up getting yourself in, you don't know what income is coming in, and all that. So it's an understanding thing. So I know it's a roundabout, long-winded answer, but I think we have a whole ed tech challenge ahead of us to really, because a lot of people don't even know what fintech means.
Right.
But we got to make it. I always say we should have like more fintech, like at the Red Sox games, at the Patriots games, right? So then everyone is kind of seeing it and they understand, hey, that's fintech, right? Yeah. And so they can appreciate that term that much more, and that's just like turn off like finance and technology. That's not me. It's everybody. Fintech is fin life, right? We got to agree. I think when we stop saying fintech, that's when it'll get big,
Yeah, that's when I'm like, oh no, it's just that.
That's life. It's life. It's not fin. It's life.
I like it.
Yeah.
I'm an advocate.
So, Mike, thank you so much. What an unbelievable conversation. I'll be deep into Boston FinTech Week. You'll see me handing out flyers and serving coffee. I just love getting involved.
Awesome. And I'll be in touch with John to make sure he shows up here for you, as well as Chaz and John at Roots. Okay.
Oh, awesome. Great. It's all about the network. And thank you so much, Mike.
Agreed. Thanks, Rob. Appreciate you.
Hey, thank you so much. Bye, everybody.
Bye now.
Thank you for listening to What the Heck FinTech. Make sure you tune into our next episode as we continue to interview FinTech leaders and share real-world stories from across the FinTech ecosystem, so you can fully understand that FinTech is Fin life.